Good morning. I hope you're doing well and welcome to today's edition of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com and Amana Capital. It's 9:16 a.m. in London, where I'm based, and I'm going to provide you guys with a quick update on the financial markets here at the live trading room at TradeCaptain.com. Before we begin though, as always, I need to stress that trading financial markets is unfortunately risky and there's a general risk to lose all of our invested money. Okay, good. So we're going to take a look at the Euro, Bitcoin, Gold, Crude Oil, and the DAX 30. Now, if you're not already following us on Twitter, don't forget to click down here on Trade Captain CPT. Why? Well, because sometimes we do special things here on Trade Captain that is not distributed to, say, my own Twitter, but also other channels. As an example, yesterday we did a special update on the crypto market update. As soon as that was out, we did a quick update here. It was quite a lot of confusion. I think still some confusion if it was the Binance hack or that statement from the U.S. Security and Exchange Commission that actually caused the sell-off. I'm quite certain it's the latter. And we did a special update on that. I have about 512 views here on that. So if you don't want to miss out, don't forget to subscribe to Trade CPT. Okay, let's begin. This is your euro versus the US dollar, and this is a 4-hour chart. You can see that up here. The market is moving down a little bit today, which makes perfectly sense because the market had quite a strong move from 120-151, and we didn't correct yesterday, and at one point this market just needs to correct a bit, give back some of its gains, which makes perfect sense. Now I think the market can go down maybe to 123.57 or so, maybe even all the way down to 123, but probably around these levels the market is probably going to try to buy here and maybe target the same high, which is the 124.44 high. The alternative is that we take out the high and then just go to 125. And now if we take a step back, you look at the price action from January 25th, you can see that this market is not necessarily giving us anything good to trade with. This has this expanding sort of volatility and is trading sideways, and that means that we can't necessarily trust these short-term levels like this one here or this one here. So personally I'm not touching this, but if we're gonna follow like the short-term trend, then what I just said stands, which means that the market might go down, people will look to buy here for this to go to the upside, alternatively to take out the high. However though, because the market is in this kind of weird sort of range pattern with expanding range, if anything, I'm personally not trading this. As well, today we got the central bank rate meeting from in the Eurozone. That as well, I've been reading online, people, some people say this, some people say that, some people say the third. Like, people don't actually know what's going to happen, but the general theme is that obviously they're going to leave or end quantitative tightening or easing, sorry, and that's one of the reasons why the euro is moving to the upside. So that is something that we're going to be watching, and it's all in the details. And as well, people want to know if Mario Draghi has any issues with the euro, but so far Mario Draghi has seen the euro as strength in the economy rather than like a threat to inflation. But obviously if the euro continues to gain and gain and gain, then that's gonna put downwards pressure on the in the euro area, and that just means it's going to take longer time for him to actually well, it's going to take a long time before inflation just reaches the target of 2%, and maybe we'll have quantitative easing for longer and low interest rates for longer. Now what he's going to say, well, the market has been trading sideways here since January, so I'm not really sure he's too worried about it right now, but my gut feeling is that he might say something a little bit about it, and at the end of the day this chart is not going to look too much different tomorrow at this time. That's what I think. Let's take a look at the price of Bitcoin. So Bitcoin here, as you know, we turned bearish on the break to the downside. The market moved down. Traders did not want to buy here. We did not have the opportunity to even look to go long, just because the market was still creating these lower and lower highs. And as long as we are creating these lower and lower highs, it doesn't make any sense really to look to doesn't make any sense actually to look to buy at all, unless of course you have a very long-term view on Bitcoin and you just think this is a great level. But the issue here is that nobody really knows where this thing should be trading at. So technically it doesn't make sense, at least for me, to look to buy here yet. The market's creating these lower and lower highs, obviously smoothing to the upside, and maybe this old support level could potentially turn into resistance. So maybe it'll go up a bit, maybe traders gonna try to sell here, and then it goes back down to the low, and then we'll see if we still trade above this low, which is an important low and a major support level. If we trade above this low and the price stops creating lower and lower highs, then if the market creates lower and lower highs like this and ends that series, then yes, we might look to go long again. Okay, until that happens, it's a bearish market, can go up, down, might even take out this low, which is 92.44. take that out and the market could decline to 8,400. Here's crude oil. Crude oil, I think it's gonna be great, but not today, probably not tomorrow, maybe mid next week or something like that. The market is trading in this big sort of consolidation phase or wedge, triangle, whatever you want to call it. And if we take out 63.31, then yes, we might go to the upside. Until that happens, then we could go down a bit maybe, and up, and then down, and then up. It's just gonna be very random within this range, and then eventually we have a nice break. Obviously, if we take out the lows, it goes a little bit lower. That's just quite straightforward, right? But the whole market here most likely is gonna consolidate, and I want to wait for an opportunity like we had here. So back in November, the market as well was trading sideways, and I said let's wait, let's take it easy. And then we took out the high and we had a nice good move to the upside, and you'll usually have that after some sort of consolidation, and we're seeing a big consolidation here right now. Here's gold. A few days ago we said if you wanted to, you could buy down here and book profits in the middle. That happened. The market is now moving to the downside, and I think we can go down to 13, 16, and then maybe down here if you want to. I think traders will try to go along again. Why? Because as long as trade above 13.02, we are in some sort of a bullish uptrend, and this will just be a consolidation correction above this level. Obviously take it out and we can trade lower. Here's the DAX 30. The DAX 30 is moving to the upside. So a few days ago we said that we traded lower, and I took a fib from the low, from the high to the low, as it may be up here. Traders are probably going to sell. The market moved against us, and then we're up a bit, and now we're back in the red again. I think we just need to give this time for us to roll over here and move to the downside, and that's it. Is anything worrying? Well, if you're totally new to trading stock markets, then this is for you. Obviously, if you traded before, then you already know this. But traditionally, stock markets, they go higher because of inflation, because of they also represent the corporations of an economy. So as long as we have positive GDP growth, say GDP increases with 3%, then it's most likely that the corporations of that country as well gain by 3% in value. It's usually something like that, because obviously wages are not too high any longer, so the workers don't actually benefit too much from productivity gains. So with that in mind, stock markets in general tend to go to the upside. I think the S&P over the last 120 years or something like that, like 70 out of 70% of all years or something like that, the market goes to the upside, which means it's not something easy to sell And it's just when you have those recessions that happen, well, nowadays we haven't had a recession for almost 10 years, so that's when you tend to have those massive declines. And obviously you can have a 20% decline, 15% decline, but it's quite difficult. And what most people do, they want to trade that. They don't necessarily buy short the stock. They would most likely trade via options or buy the VIX, because the VIX can only go down to 0, right? So if VIX is at, just give you an idea, it's at 10 or 5, say that this is 5, you buy a 5, then it can only go to 0, but it can theoretically go unlimited to the upside. So you cap your downside and you have unlimited upside, which is what most hedge funds are looking for. So bear in mind that the likelihood of this specific setup might not actually work out, just because the markets in the long run go up because of inflation and because of economic growth. Okay guys, that concludes today's market update. If you want to know more, then today at 1 p.m. London time, so that's in 3 hours and 30 minutes from now, we're going to have a client-only Q&A session. I'm going to be hosting it, and if you want to join that, just sign in with your Amana Capital account up here. If you haven't actually registered before, you would need to do that. Click down here and then sign up, and just make sure that you sign up with the same email that you have your Amana Capital trading account with. Now, I'm not 100% certain on this, but you can also try to click here, forgot your password. If you click here, you should be able to put the email that you used to register your real account with Amana Capital, and I do think you're gonna get back a code. So you're already pre-listed here, but I can't guarantee that. If that's an issue, what you need to do is register now up here, and you'll have access. You can of course have access even if you're not an Amana Capital client, but you won't be having access to today's webinar. You will however have access to other things. So you will have access to things like the premium educational videos. There's several of those in there. You want to check those out. We have as well webinars. We have a special webinar coming up on the 20th that has to do with Forex sentiment. And then you can download some of our quarterly outlooks. Something that's really popular right now is the book, or the little update we produced. It's a few pages long, and it's about the political roadmap of 2018. What this is that it is an ebook where we look at things like Brexit, of course, midterm elections, the Russian presidential election that is coming up in March 18, I think it is. And then we take a look at, well, I think it's 4 or 5 different things. My memory is terrible. So Italian general election, of course, that already happened. Russian presidential election, the Mexican presidential election, and the US midterm election, and a bit about Bitcoin, sorry, Brexit. Why all this? Well, because you can trade the Russian ruble, right? And the Mexican peso as well is possible to trade. And then, of course, the dollar is the dollar, right? So that's just part of everything. So that's why we focus on these specifically. Why? Because around these big events, you can have those big moves, as you saw, for example, with Brexit, where currency could gain or decline, several percent in just a few days. And this can provide you some input to what's going on, what is it important, and what do we need to pay attention to. Okay guys, have a great day. I want to thank you so much for joining, and I hope to see you guys here at 9 a.m. tomorrow morning for the next live market update. Have a good day. Thanks.